Hi everyone, let's go over my micro and local bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the micro bearish scenario where we are looking for a WXY to the downside, a three-wave structure within W and ABC, where the most common target for wave C is between the 1 and the 1.236, taken from the high to the low of A to the high of wave B, which as you can see has been very nicely respected indeed. Currently, we are then looking for a sideways ranging structure in wave X before then a continuation to the downside in wave Y, where this support area below is very interesting between 25.7k and 25.9k. Now, a minimum target for wave X is usually the 0.382 pulled from the high to the low of wave W, which as you can see has not yet been hit. So from a probabilities perspective, we still expect price to move to the upside to at least hit the 382. However, a maximum target for wave X inside the price action of wave W is the 886. So we have to wait and see how these waves form locally to get a better estimation if the target is going to be 382, 05, golden pocket, 786, or maybe even the 886. If we look at scenarios for wave X, the first scenario I like to show you, which is definitely interesting, is this flat scenario. So we have a three-wave structure in wave A, currently working on a three-wave move down for a wave B, before then an impulsive structure to the upside in a wave C. The most common target area for a wave B is between the 1.236 and the 1.38, taken from the low to the high of wave A, which is sitting between 26.3k and 26.2k. And there is some additional support. This white box over here is a 4-hour support resistance area. So you can see over here, this white box, you can clearly see the support, resistance, bit of support, more resistance, resistance, support, and potentially another move down for support, before then a bounce for wave C. Now you can see that the target area for wave C, the 1.618 to the 2.618 over here, also matches the wave X targets, as I've just mentioned. Most commonly, a wave C will end between the two 1.618s. It kind of depends on the low of the wave B though, where the 1.618s are positioned exactly, but with a little bit of an estimation of the low of a wave B, the target for C most commonly is between 26.8k and 27k, and a 2.618 is a more rare target for a wave C, which is currently sitting at 27.2k, right inside this resistance area over here, which is sitting between 27.1k and 27.3k. Now you also see this wide line over here, which is actually a first resistance area if we talk about the levels towards the upside. Over here you see a bit of a gap, and this white line is the low of this gap over here, so price can react over here and then move to the downside. And what is also important is that this gap is right on top of the 0.382. You can barely even see the 0.382 for this wave X. So 26.8k is the first level of interest if I look for price to potentially reverse at levels to the upside. The second level of interest is the order block area over here around 27k, and then we reach the target box up here. Now, if you then finally look at the last scenario more locally, then this triangle is something I thought of this morning over here, where inside this triangle, all of the waves have to be a zigzag except for one. So it's not easy to count all of these waves as very nice zigzags, but at least I wanted to drop the ball here and at least show this scenario where three wave in A, three wave in B, potentially here three wave in a wave C. It's definitely not clean, so the invalidations are very clear. It's also not necessarily the highest probability scenario, as I'll go over in a second, but it's something that I at least want to share, and so you can keep it in mind. Currently then working on a potential wave D here, which then by itself is a 535 scenario, where the most common target for D is between the golden pocket and the 786 for then a wave E and downside. But the problem with this scenario here is that the 0.382 for a wave X is never going to be hit. So that is also lowering the probabilities for a triangle scenario locally, increasing the probabilities for a potential WXY scenario over here, or the flat scenario as I've already shown. Now this WXY scenario, three-wave structure, in wave W and then a zigzag, because in a wave W you don't want to count another WXY. That's officially not really allowed, or at least very, very low probability. So preferably here, zigzag in wave W. Then we're looking for a wave X, which can be very long. So X can finish here. Yes, it can be finished here, right on top of the golden pocket. But a wave X can also still do this, go to the 786 and then move up. And with this folder over here, if I open my Confluence folder locally, you can see this white area, and this white area on the 50-minute is actually this gap over here, which has been touched once. As you can see, it hasn't been filled completely, so there might be a little bit of room there, but at least it is an area to keep an eye on if price moves to the downside between 26.4, 26.5. So for this wave X, you want to see price then moving to the downside before then moving back towards the upside for wave Y. And because W over here is then labeled as a zigzag, Y has to be a triangle or a flat, meaning you'd then, if this is the low, for example, of X, then you'd be looking for something like this in a flat, or you're going to be looking for a triangle structure in wave Y. But again, if we get a triangle structure over here, then you're not going to reach the minimum wave X target, or at least by far most commonly the minimum wave X target of the 382. So I am still looking in general for a move towards the upside, either in this WXY scenario or in the flat scenario over here, where we're looking for an A, B, and then a wave C towards the upside. If we look at the CVD divergences, it's a mix, right? We have the CVD divergences both ways. So bearish CVD over here. But this CVD divergence is the only CVD divergence on the left, or at least with a pivot on the left of the most recent low. And I always prefer the CVD divergences on the right side of a new low or a new high, meaning I prefer the CVD divergences over here. So we had these bullish CVD divergences when price moved towards the downside, but once price moved to the upside over here, bearish CVD divergences were countering the bullish one. That is important. These very local bullish CVD divergences, higher low on price, lower low on CVD, as I'll show in a second, these have played out as this high has been taken, as you can see. So that is very nice indeed, which means that now we can remove this one from our chart. And more locally, over here, we again have bullish CVD divergences. Now, over here, we had some bearish CVD divergences, but I think these just played out over here with the wick. So that's very interesting indeed. Bit of volume coming in as well. And now we have to wait and see if price can actually move towards the upside. So these bullish CVD divergences play out, or if this one over here, the bearish CVD, is going to play out. Now, the first one that appeared on the chart after the low was made was this bullish CVD divergences, bullish CVD divergence. And from a statistical point of view, the first CVD divergence that appears on the right side of a new high or low has the highest probability of playing out. The only problem for me in this range is it takes a very long time for the bullish CVD divergence to then potentially play out. And we also constantly see the bullish CVD being countered by bearish CVD divergence. So it doesn't give me too much confidence, and I'm very happy to enjoy the weekend. Today's my birthday as well, so I won't be trading at least. And just wait and see what price does. Actually kind of waiting if it is going to take the low over here or the high, for example, over here to invalidate either or the bearish or the bullish CVD divergence. You know, it's a range. If it fits your strategy, fits your plan, make sure to trade it and just trade your plan or strategy. But especially during the weekend, you know, it's also nice to do some other stuff. So then finally, if we look at the probabilities of the different scenarios, then on the, well, micro, I only have one micro scenario really, which is this WXY scenario. Reason being, it's very difficult to come up with a bullish scenario. In a bullish scenario, you want this to be the low, and you want this to be a wave 1, and then you want to look for a 2, and then a 3, 4, 5 for much higher prices. But if you look at the length of this range, it's, you know, not easy to count this very bullish. You can have a wave 1 over here, and then all of this is a part of a like wave 2, but that's a very, very long wave 2 compared to an incredibly short wave 1. So the probabilities are therefore at the moment higher that we still have a move down to go, which is then in this case labeled as a WXY, where this support is going to be very interesting. And then more locally over here, I am still looking right for a move towards the upside to 382, meaning the probabilities for the local triangle are lower, because if you go above C, it's invalidated. If you go above A, you know, the triangle is invalidated and the 382 is positioned over here. So the triangle has the currently lowest probability like out of the three different scenarios. Also, it's not too easy to count zigzags everywhere. For me, probably the most interesting one is the flat, where, you know, it's a very clear setup, right? If you get this A, if you get this move to the downside for a B and then a C, it would be very nice. The only thing I'm thinking about here is that for a wave B, I would have liked it if price actually pushed to the downside a little bit quicker. So maybe that happens on Monday, right? But if the rest of the whole day we're going to be ranging here, then this B is going to, potential B is going to be too long in my opinion, and lowers the chances for a move down. So the longer we range here and mess around in this area, the lower the probabilities for this scenario, for the low of a B and then up for a C. And it increases the probabilities of this scenario here, where we are not going to see a low and then a move up. Instead, we have this WXY scenario, a sideways combo, where eventually, again, the 382 is an important level, and potentially after hitting that 382 at about 26.8k, that is when we are then looking for a move to the downside. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.